Hello, sir.
Yeah, good evening, everybody.
So, good evening, sir. So, I have one doubt whether it is. Can I ask it?
Yeah, sure.
So, I have one doubt. If we
Please
have,
ask.
yes, sir. Uh, if we have a client, a company receives some fixed asset for a free of charge. So, what are
Show
the
a fixed asset on free of charge.
yes, sir, free of charge? Whether it is better to disclose on the financial statement because they don't have any values for the companies for those fixed assets. So whether it is better to disclose or not, sir.
Now, this fixed asset is given to an employee or just discarding it. Oh,
No, so they are acquire company, and the company was they acquire company B. So the company B was already bankrupted. So on that point, they have take some fixed asset for free of charge, but they don't have any value for that. If anything, they
yeah,
will
then you can disclose that it is discarded.
discard
Yeah,
it, sir,
now, yeah, that means there's no realization consideration on realization.
on realization. No,
Yeah,
so
if
if
there's no consideration on realization, then there won't be an issue, no?
so, or else the couple of year later they will sold that item, so they will 100% they have to pay for that. The souls for that.
Not
No,
the
sir,
problem. Not the
for profit.
problem now. There was a value on that asset where the person who is giving up the ownership is not recording any value. If there's a value in the asset and not recording, there will be tax issues. Because no sooner the other party shows that it is that other party shows that they have realized some money on that definitely it will create some tax issues.
Yes,
If the
sir.
party who is giving out the ownership, if he's declaring a zero value, the other party also shouldn't declare it, because if no sooner they declare it, it might create unnecessary issues.
Necessary issues because this situation we cannot claim the capital allowance as well. So that's why I have asked.
No, the new party can't claim capital allowance because there's no value.
Yes.
If we are saying that there's
If the
no
new party
value,
was if the new party was sold it for the subsequent year something, they have to pay the all the profit for tax. No, sir.
correct, yeah. The entire amount is a tax liable income basically.
Yeah. Okay, sir. Thank you.
Yeah, now the time is 7:14. We will start today's session, right? To start today's session, actually, I wanted to start by 7:10. Now, 4 minutes has gone. I will share the same document which I shared that day. And with that, we will start today's session. Yeah, previous day we discussed certain things. Now we will continue from that point. We discussed up to the tax computation format. Up to the tax computation format. Now we have to continue from that point onward. Right? Yeah. The tax computation format, that is the format what we have discussed at last. Yeah. I explained this format, and thereafter we discussed the qualifying payments and reliefs in detail. And after that, we stopped for that day, right? Right. Anyway, we'll go through the qualifying payments and reliefs, but qualifying payments and reliefs, I explained in detail but I'll just run through it because when I was explaining this computation format, along with that, I explained the qualifying payments and reliefs also. Now in this, as I mentioned, reliefs are available only for individuals. And qualifying payments, depending on the item, it is available for any taxpayer, any person. Right. Under reliefs, one individual's reliefs, one most important thing is personal relief. Now, sometime back, it was 500,000 rupees. At the beginning, it was 500,000 rupees per annum. Then it increased to 3 million per annum. Then they reduced it to 1.2 million per annum. Again, they increased to 1.8 million per annum. Obviously, 500,000 is not too small, but with country's situation, 3 million personal allowance is little too high. When we see the country's situation, economic situation, 3 million is little too high. Anyway, I think now we are in an average personal allowance rate of 1.8 million rupees a year. 150,000 rupees per month if we'll take as months. But anyway, these amounts are per year. Right. This 1.8 million started on 1st April 2025. Right. Now for the year 25-26 year, we are getting this 1.8 million per year. Now, as I explained, this allowance is entitled to any non-resident but citizen. That means basically any citizen of Sri Lanka, whether a resident for tax purposes or otherwise, as far as he is fulfilling the requirement of citizenship in Sri Lanka, he gets this. That is, even the dual citizens who are having citizens in 2 countries, including Sri Lanka, is getting this personal allowance. Then the second category is tax residents of Sri Lanka. When it comes to tax residents of Sri Lanka, whether that person is a citizen or not, if that person is a tax resident of Sri Lanka, that person is entitled for this personal allowance. Like foreigners who are working in Sri Lanka, when they continue to work in Sri Lanka, stay in Sri Lanka more than 183 days, they becomes resident. No sooner they complete 183 days, from that day onward, they becomes then they become resident for the whole period. As a result, they are getting the personal allowance of 1.8 million personal allowance. Then sometime back we had employment allowance. Now it is not there. Then 25% repair allowance on rent, investment income, only for individuals. If an individual is having a rent income as part of investment, as part of investment income, then that person has an option of selecting actual repair expenses, 25% of the repair allowance. One out of these two. Either 25% of repair allowance or the actual expense. 1 year that person can claim the actual, another year that person can claim the percentage of this 25%. No problem. But this income has to be investment income.
Sir, I've lost you there. I can't hear you. I think there's some people with their mics on. We must tell them to switch it off. It's a disturbance.
Yeah, we'll continue. We'll continue.
So your cam is off. Now it's okay.
Yeah. Do you have any question? Right.
So excuse
Next.
me. So with regard to this personal allowance of 1.8 million, if
I
a
have to
particular
talk loudly. I can't hear you clearly.
there's something wrong with this system, I think, sir. Can you
I
hear
see.
me, sir?
So, what's your question?
Yeah. Now, if a person has income only for a period of 6 months, say, not for the whole 12 months, his income is only for a period of 6 months. Then,
Yeah.
then he claim whole personal allowance of 1.8 million or the half.
Yeah, even 6 months, he can claim the whole year's personal allowance. This personal allowance is for a year. Therefore, no problem. We'll say due to some reason, this particular person didn't have any income for the first 6 months. No problem. The personal allowance, he can claim for the whole year. First period, income 0. Second period, income is there. Take the total. Total is the accessible income. Then from the total, he can deduct these reliefs. No problem.
Thank you, sir.
Next, 25% repair allowance I explained. Now here, what I mentioned is rent investment income. I'll underline that. Why? Now, if a person is having a rent business income, he is not entitled for this 25%. Now, even an individual may be having a business rent income. We'll say his business is buying, constructing warehouse and renting it to other people as a business. If it is treated as a business income, then repair allowance is not there. Now, you might ask, how it is business? Yeah, there's a problem. Now, in the case of individuals, it is always advantageous for them to consider it as investment income. But in certain cases, you might be renting it on sharing basis, and now Colombo, if you take certain companies, they are having sharing storage. Likewise, suppose this sharing storage business is conducted by an individual without registering a company, by an individual as a business. If it is as a business, that person can't have this 25% repair allowance because here it is limited to investment income. If you will recognize it as investment income only, you can claim. Understood? If you have any questions, please ask. Next, the senior citizens interest income. Sometime back, up to 31st December 2019, we had this. Thereafter, they removed it. Right. Next, relief on individuals and partners on foreign currency service income. Sometime back, we had this 15 million personal allowance per annum. That is also abolished with effect from 1st January 2020 to accommodate 100% exemption under third schedule. Item U3. Third schedule item U3, there was 100% exemption. to allow this 100%, by allowing 100% exemption, they removed this 15 million relief. Now, ultimately, what has happened? Now, no 15 million relief. Again, no exemption also now. Because the exemption they removed with effect from 31st March, no? 31st March 25, they removed that exemption. Now, all service exporters, they have to pay 15% tax. Ultimately, we lost both. Next item, sometime back we had an investment or expenditure relief. Investment or expenditure relief. Now, certain items are expenditure, certain items are investment. That means this expenditure may be capital expenditure or revenue expenditure, either case. A resident individual was entitled to enjoy a relief on following expenses. This I can say expenses stroke investment. As I promise, I'll be sharing this at the end again. This exempt up to 1.52 million a year, but this exemption was there only from 1st January 2020 to 31st December 2022. On what? On health expenditure, including medical insurance, education expenses, including the children's education, interest on housing loans, contribution on local pension scheme, expenditure on purchase of SEC listed shares, securities, and bonds and bills. On these things, they had the exemption, right? But now it is not there. Then any resident individual who has acquired solar panels to fix on his premises, not house roof, premises roof, and connected to the national grid, is entitled to claim relief up to 600,000 rupees for each year of assessment on account of the total expenditure on such solar panel. Law says solar panel, but actually it is solar system. Or the amounts paid to a bank in respect of any loan obtained to acquire such solar panel. If it is, as I explained, if it is your own money, you can claim the entire amount. You can claim the entire amount, right? If it is entire amount subject to 600,000 rupees per annum, upper limit of 600,000 rupees per annum. But if it is a bank loan, the capital repayment of the bank loan, you are entitled to claim. It covers, or now laws covers only solar panel, but actually it is now, as it is an error in the law, they are giving on the whole system. At the same time, but unfortunately, the loans are limited to bank. The loans, they have limited to banks. Now, that is also not fair. If you obtain a loan from a finance company, you can't enjoy that. I have given that. It is limited only to then
may I have a question, please?
Qualifying payments also. Number one, donations by any person. Donations by any person to approved charities subject to the upper limit. Subject to the upper limit. Donations by any person to approved charities. Now, when a person gives donation to approved charities is subject to upper limit, you can claim a qualifying payment. In the case of individuals, it is 75,000 rupees per annum, subject to 1/3 of the taxable income. Now, you are claiming this before arriving taxable income. Therefore, you have to apply a max formula for that. Because the law says 1/3 of the taxable income or 75,000, whichever is low. In the case of a company, 1/5 of the taxable income or 500,000 rupees, whichever the low. Therefore, both cases, you have to apply a max formula and do that. Right. Next. Right. Next are donations by any person to government or governmental institutions. Donations by any person to government or governmental institutions. If you donate any money or goods or whatever it is, any donations, if you made any donations to government or governmental institutions, then without any upper limit, you can claim it as a qualifying payment. Why there's no upper limit? I explained that day. Because if you pay tax, suppose you are paying 30% tax. After paying 30% tax, you are leaving with another 70%. If you pay 36% tax, after 36% tax, you are leaving with balance 64%. But if you give donation to the government, that donation amount, whole amount goes to the government. Therefore, there shouldn't be an upper limit. Okay. Then next, any sum paid to consolidated fund or president fund by corporations. This is applicable for public corporations. Next one, contribution made by a resident individual to establish a shop for a female individual. For a female individual who is from a Samurdhi beneficiary family, as recommended and confirmed by the Department of Samurdhi Development. Now, this, as I explained, we can select a Samurdhi development family, a lady of a Samurdhi development family, and give some donation, maybe cash or maybe items, goods. Then that donation we can claim the upper limit for our tax. But the problem, people manipulate these things. As the people says, you have to get approved, confirmed by the Department of Samurdhi Development. I don't know how to do that. Anyway, if the confirmation from Samurdhi Development, Department of Samurdhi Development, you are not entitled to claim it. Next item, expenditure incurred by any financial institution. Expenditure incurred by any financial institution by way of cost of acquisition or merger with any other financial institution as confirmed by CPSL Sri Lanka, that is Central Bank of Sri Lanka, can be claimed as a qualifying payment over a period of 3 years of assessment. That means, as I explained, when the financial institutions merge together, then the total cost. Could you please mute your mic? Could you please mute your mic? It is disturbing to the others. Whenever you need to ask a question, please unmute your mic and ask the question. After that, better to mute it. Any unclaimed amount, you can carry forward and claim immediately after 3 years. That means suppose the total cost is 3 million. First year you claim 1 million, second year 1 million, third year 1 million. Suppose third year you need not to claim, you are not in a position to claim 1 million. You can claim only 6 lakhs. No problem, you can claim 6
Yeah.
lakhs. The balance 4 lakhs to the subsequent year and claim it.
It's very difficult to follow. There is a disturbance. Can't follow
Please
you.
mute your mic. Please mute your mic. It is disturbing to the others. Please mute your mic. It is disturbing to the others. Please mute your mic. Expenditure incurred on or after 1st April 2021 by any person. On these are film-related items. As I mentioned, for film production or film promotion, in that case, there's an upper limit of not less than, a lower limit of not less than 5 million cost. Minimum of 5 million cost. Second thing, in the construction and equipping cinema, the new cinema, at a cost not exceeding 25 million, not exceeding. Then in the upgrading of cinema, at a cost not exceeding 10 million, provided that this deduction shall be restricted to 1/3 of the assessable income. In this case, it is upper limit is restricted to 1/3 of the assessable income of the year, with the carry forward and claiming facility of the non-deducted amount in the next succeeding year, and so on, subject to 1/3 restriction. Saminda, you have to unmute your mic. You have to unmute your mic. It is disturbing to everybody else. Saminda, please mute your mic. I'm not the administrator. I can't block him. His mic, I can't block. That is the problem. Yeah, we need to block him, but I am not the administrator. Therefore, I can't do that. Disturbing everybody.
Very difficult reason, sir.
Yeah, let me see whether the position. Mute in, I can't do. I'll see whether I can do that. Remote control. No, I can't mute the others because I am not the administrator. Right. Anyway, expenditure incurred on film-related things, subject to upper limit, you are entitled to claim. Now I'll move to sources of income. I'll move to the sources of income. There are 4 sources of assessable income. As you know, there are 4 sources: employment, business, investment, and other sources. Right. We'll continue anyways, real news and now. Right. Everybody's time just wasted.
May I ask you a question, please?
Yeah. Meanwhile, you can ask your question.
Yeah, I'm sorry.
Yeah, please. Please ask your question. Right, anyway.
Hello?
Even with difficulty, we will continue.
Hello?
Hello, yeah.
Did you hear me?
Yeah, I can hear you. Ask your question.
Yeah. This is regarding the rent income.
Yeah.
To decide whether it's falling under investment income or business income, what is the very thin line that we can consider whether it's falling to which side?
That's a good question. Only thing, there's no specific criteria to decide it. There's no specific criteria. Basically, along with the giving of that premises on rent, if you are giving any other connected facilities, some additional facilities, then be difficult for you to prove that it is investment income. Then it is more towards business. Now, as I mentioned, now in Colombo and suburbs, some companies are having sharing buildings. They are giving on sharing rent basis. Right. Now, on those things, they are giving, along with the building, they are giving the, sometimes they are giving the security service and various other connected services. Right. If they are giving any other connected services also along with the security, along with the premises, then bit difficult for you to prove that it is a investment income. Then it is more towards business. Right. Sometimes administrator. When people comes, somebody is there to record the people who are coming and leaving and all. Or some security. Things like that. When you are given various connected services, then in that case, it bit difficult for you to prove it as the investment income. Then it may be more towards business. Understood?
Yeah, it's very much clear. But if it is not, if they are not giving any other services, so in 1 year, can it be treated as business income, or another year, can it be treated as an investment income? Depend on the maximum tax benefits. I mean, year to year, can we change the nature of income to the benefit of a taxpayer? Is it possible?
Yeah, that is now when the law is when there's no proper coverage in the law. When there's no proper coverage of the law, definitely you can do that. But the problem, if there are any other connected services along with just giving the building out on rent, then you may be in a bad wicket. Right. Therefore, if you are not giving any other services connected with that, definitely you can disclose it as a rent income. That is the best. But in the case of rent income now, not like 2006 Act. In 2006 Act, from rent income, they were not, we were not permitted to claim expenses other than the repair. Repair and certain repair and rates. In 2006 Act, we were permitted to claim only repair and rates against the rent income. But under the current law, under Section 11, we are permitted to claim all other directly connected expenses. As a result, nowadays, it is better for you to be in the rent category, investment rent category, rather than in business rent category. Yes, it is to your advantage in that. But if you go under business category, you can depreciate the building, capital allowances. But if you are in the rent category, the investment rent category, you can't claim capital allowances. You have to consider that also. But there the problem, if you claim capital allowances and after 20 years, if you dispose it, then the entire profit is a business profit. If you keep it as an investment asset, then once you dispose it, your gain is a investment capital gain, which is taxing at 10%. If it is individual, taxing at 10%. Therefore, in advance, you better consider all these pros and cons. You better consider all pros and cons and decide it.
Hello, sir. Hello, sir.
Right. Yeah.
Sir, can you please repeat it again, sir, please?
Now,
Mr.
under the
Mr.
current law,
Mr. Atula, I'm sorry to say, it's very much difficult to keep the concentration because of this disturbance from these ends.
yeah,
we
that's
are
the
very much
thing. Yeah.
keen of this session.
I'll
Very
try
difficult.
to. No, that person is not fair to everybody else. No, because unfair.
Sir,
I'll
I
try
think
to
he's not
contact
present at
staff.
his computer. He's not present at his computer. He had just switched on and he's
No,
not
that's the
there.
thing. If he is not in the computer, he can mute it and go. No.
Be very disappointing. It's very difficult for us.
That's the thing. Yeah, people should realize. No. Line is also busy. It's wasting everybody's time.
I tried to call Mrs. Milestone. She also is not responding.
So sorry to disturb you this time. One person's somebody. Mic is on and disturbing everybody. I think he has on the mic and gone somewhere, and all of the resident people are talking. It is disturbing to everybody. Yeah, because I'm not the administrator, therefore I can't block him. Please. Right. Okay, she'll do something. Still nothing happened. No?
Can we all log out and rejoin without him? Is there any way of doing so?
Now shall we see? Still that is there.
Atula. Hello.
Hello, yeah.
I think when these meetings are set, there is an option to switch off all cameras and mics when the participants are logged in. So, but I have
Yeah,
not
there's a
seen that.
facility. Yes, yes, there's a facility, but that facility is there with the administrator. That is the
Yeah,
problem.
true. Yeah, administrator can set it in a such a way when the participants are logged in, switch off mics and videos automatically. So maybe if Shanti can put it that block, I mean, it will be much
Yeah.
beneficial because, yeah.
Correct. Yeah, at least in future.
Yes.
Today, now I informed to Ms. Shanti.
So if you log out now and rejoin,
I'll try her again.
out, you know.
Hello, aren't there any IT person? Saminde got somebody. Saminde got yeah. No, I don't think what has happened now. He has put recording on it and he's having some discussions with family members or something like that. Goda. Yeah, if it is possible for you to contact him and see, because Through the WhatsApp group, can't we find his number?
Hello, sir.
Yeah.
Sir, I have one doubt. Can I ask now?
Yeah, sure. Please.
Sir, if a person have an investment property like an house, and he also installed the solar panel, so the last class sir was said us to if we have a solar panel, so we can claim the capital allowance.
Correct.
And
Yeah.
also the same person was generating the electricity from that solar panel, and he also generating the income from CEB, sir.
Yeah.
So on that point, if the solar panel, so if you sir was asked us to do a we have to consider it as a business. If we have a solar panel, we can claim the capital allowance you have told us to for our last class. So in
Yeah.
that point, in that case, the the capital allowance was exceed the income. The business, if we doing a computation, tax computation in this capital allowance, if the solar panel income was uh, uh, lower than uh, lower than the capital allowance, so
Yeah.
automatically the business income is, we will show it the business is a loss. So in that
Correct.
point, as a calculation, so on that loss can be set off against the investment income, or else.
Yes. Now,
So
business losses can be set off against business profits as well as investment profits. Investment non capital gain. Again, the capital gain you can't set off. Any other investment gain you can set off, no problem. Now, by fixing these solar panels, because solar panel is a separate business, then solar panel, the system, you can depreciate. The whole entire system, you can depreciate at the rate of 20% for 5 years. Then as a result of this depreciation, the income may be lesser than the capital allowance amount of that year. As a result, you might end up with a loss. If you end up with a loss, it is a business loss. Tax allowing business loss. Therefore, you can set off that against any other business income or any investment income other than the investment capital gain. No problem, you can do that. Now,
okay.
these days, there's a problem. Now, when we are doing this net metering, net accounting and all, now, how to
Sir,
calculate
I'm
the
sorry, sir. I'm
income,
sorry,
there's
sir.
an ambiguity on that.
I cannot hear you, sir. I'm sorry. The sound is disturbing. I cannot hear you, sir.
That is the thing is, they should understand, no, because he's disturbing everybody. Can't understand why these people can't understand that. Disturbing everybody else. Now, through our WhatsApp group, can't we find this Saminda Egodagoda's number? Through our WhatsApp group, can't we find his number? I think I may be having another list, and I'll see whether I can get his number. It is also not there.
Sir, I have a small question.
Yeah, please ask. Because anyway, it's disturbing. No, we can't continue it. Therefore,
Yeah.
you can ask questions. At least we can make use of some time.
This now I'm talking about tax on individual. Now we
That's
discussed
on
about
individual. Okay.
now we discussed about solar paneling income and setting off
Yeah,
the
okay.
allowance. Likewise, rent as a business and as somebody is having a property and rented out and get a rent income. Now I'm a bit confused. Should we record this as investment income or other income? How do we decide on that? Because
So basically, generally the rent income is a business income, right? Basically, it is business income.
yeah,
But certain business generally it is investment income. But what I said is, if it comes with some other services also, connected other services, then in most of the we have to decide it as a business income.
right. Okay, I understand.
That
So
is
now,
how we are doing.
solar paneling income, if it's completely given to the national grid, would they put it as investment income or other income?
No, that is definitely a business income. That is not investment.
Okay.
That is not investment.
Okay, solar panel should be under business income. Okay.
Yeah, that comes under the business.
What would you typically put under other income?
Sorry, no. It is a business. Why you are fixing solar?
Yeah,
Get income.
yeah, that's right. Yeah.
We have to see the substance of that transaction. Substance is a business.
Okay.
Hello, sir.
Yeah, please, sir.
So on that point, so we will set off every investment income to our business. Like I was asked you the question before, the solar panel, if it come to the business loss, so we will set off every our investment income to that loss. If it is the taxable income was end of the we have set off every our investment income to that loss. If the investment income was came to zero, if we are not liable to pay for that investment income, sir, right?
Yes. If you have any investment income other than capital gain, then you can set off this against that. No problem. There aren't any limitation in that. Now, in the case of investment capital gains, then there's a restriction. Because investment capital gain, it says that you are not permitted to set off any other things. Except for that, you can register, you can make use of that.
Okay, sir. Thank you, sir. It's clear.
Are there any other questions?
Well, you said that the fixing of solar panel is a business income.
Yes.
At the same time, I mean, if I build up some shops and I get some rent from that, so that also can be defined as a business income other than an rent income, isn't it?
Sorry, I couldn't follow you. Can you repeat it?
Okay, I am repeating myself. I mean, fixing solar panel, you said the income coming out of which is a business income.
Okay.
Hello, right?
Yeah, okay.
So, yeah, at the same time, if someone build some couple of shops and get some rent income, it also can be a business income, not an investment income. Is it?
No, just if you are just giving out on rent without other connected facilities, special facilities beyond the normal premises, then it is to be considered as business income, right? If it is with various other facilities, now I know this chair in stores and all, it comes with a lot of other facilities. There's a weighbridge facility. Then there are separate security facilities. Then there are administration recording facilities. There are so many connected facilities are there along with that. If there are so many other connected facilities, now as an example, I'll say, I build a building to be given out on rent for tuition classes. I'm giving that for tuition classes. Now, if I'm just giving the whole for tuition classes, definitely it is rent income. But to give this whole, I have to put furniture. Then I may have to put security guards, or I may have to put laborers for toilet cleaning and surrounding cleaning and all. I may have to run a canteen. I may have to give various other services like that. If I'm giving all the other services, some material services, then it is more towards business than investment. Therefore, there's no specific yardstick or criteria to decide whether it is business or investment, right? But depending on the case, you have to decide it. Understood?
I agree for that. In the same way, can we identify income coming out of putting up solar panel is an investment income, not a business income, isn't it?
No, solar panel, we are not hiring that panel to anybody, no. Now, if it is a house, you are giving that house for somebody else to use that facility. But in the solar, what you are doing? You produce something, you produce electricity, you produce it and supply it to another person. Definitely, it is not the investment income. It is not a rent. You are doing thing like manufacturing. You can't use the word manufacturing. It is production. You produce electricity and sell it. It is not investment. It is definitely business.
Yeah, it's very much clear now. So, two good news is the person has been muted and you are the host now.
Yeah. I think now that person is muted, no?
Yeah, he
We'll
has been
try.
muted by the host and host turn you as
Yeah,
the
I
host
think
now.
so. Yeah,
Yeah.
yeah. Now we'll go back. We'll go back and try to do continue our session. So many other things are here and there. Right. Yeah.
Yeah,
He
excuse me,
wasted
Mr.
almost
Atula.
1 hour. Yeah, almost wasted
Yeah,
1
Mr. Atula.
hour. Yeah. Yeah, we'll continue.
Mr. Ranagir.
Yeah, please.
Yeah, I'm Tarindu. Shanti's connection, I have shipped to you so you can control if there any unmute person.
If there are any problem, I can control. Only thing I don't know how to do that. That means I have to go into the more option or remote control.
Yeah, you can click on the participants. Then you can see the list of the all participants.
I'll just see. Then
yeah. Then
right. Now I can
yeah.
do that, no?
Yes.
Okay. That's good. Now in future I'll do that. Right?
Okay.
Okay.
Okay, right.
Okay, thank you.
Okay.
Okay, thank you. Right. Anyway, at last, after 1 hour, we sorted out the issue. Right, we'll continue. The hour which we lost, I will try to cover up that today and next day. Right. I'll move to sources of income. Right, sources of income. There are 4 sources. I think everybody can hear me, no? Can
Yes,
you all
yes.
hear me?
Yes.
Yes,
Now it's
yes,
clear.
very much. Yes.
Yeah, okay. Now, sources of income. Now, as we learn as we know, there are 4 sources of income: employment, business, investment, and other sources. Now, out of these sources, employment income will be covered by Ms. Saman Disanayaka. In the next 2 days, he will cover that. I'll be covering the other 3 sources, that is business income, investment income, and other sources. Now, when we are doing taxation, it is very much important that day I explain that we normally start with accounting profit and end up with the taxable profits called assessable income. Right. For that, normally we start in my format of calculation format. I show that. Right. Now, today, we'll move to one by one these sources of income. Under that first thing, for all these sources, we'll see how to account for these sources. Now, under section 21, there's a opening basis of calculation of income. Now, basis of calculation of income. We'll see the basis of calculation of income, right? How to calculate. In section 21, it says, now before that, we have to see how to prepare, how to arrive these things. In arriving of the tax, in arriving of the assessable income from these sources, especially in the case of investment income and in the case of business income, especially in those 2 cases and even other income, except employment income, we have to apply the generally accepted accounting principles. Generally accepted accounting principles. These generally accepted accounting principles are well covered under the accounting standards. As a result, for taxation also, whether we like it or not, we have to apply the accounting standards and generally accepted accounting principles. Now, applicable basis, whether we can apply cash basis or accrual basis. That is well addressed in the tax law in section 21. As per the section 21, we'll see whether we have to apply the cash basis or accrual basis. In the case of employment income, it is applicable only for individuals, right? In the case of employment income, we have to apply cash basis accounting, right? Law says cash basis. Now, but even in this case, as usual, there's an error in the law. It is not properly explained how to apply this cash basis, right? Business income. When it comes to business income, either case, whether it is for individual or any entity, other person mean entities, we have to apply accrual basis. No option, we have to apply accrual basis. Then if we'll go to investment income, we have to apply for individuals, law says cash basis. For all entities, proper basis. Entities, proper basis. Then other income. When it comes to other income, either case, whether it is for individuals or for other persons, we have to apply appropriate basis, proper basis. It says proper basis. We have to apply a proper basis, right? Now, when it says proper basis, the proper basis of 1 year may be different from a proper basis of another year. As a result, when it is a proper basis, we can change the basis in another year. No problem. There's no restriction of changing the basis, right? Now, employment income, I said, it is not fair to say as cash basis. Now, when it is cash basis, the term cash basis is not interpreted in the Inland Revenue Act. Right? Cash basis, the term cash basis is not interpreted in the Act. When it is not interpreted in the Act, how to do that? It is not interpreted. Then we have to apply the normal application of cash basis. Normal application of cash basis. When it is normal application of cash basis, right? Normal application of cash basis, whenever we receive money, we consider it as income. Whenever we receive money. Now, if it is the situation, March month salary, when we consider March month salary, as per our labor laws, we may be receiving the March month salary maybe on or before 10th of April. We'll say I received March month salary on 10th of April. Am I to include that March month salary in the previous year where the March month is there, or to the next year where the April month is there? There's an ambiguity which is not addressed in the tax. This is an error. But practically, after recognizing that this is an error in the tax law, for March month salary, even we receive the March month salary in April, we consider it as a income of the month of March. Okay, that is what we are doing. We consider it as March month income. Then, what about the bonus? Sometimes some companies are paying bonus based on that year's profit. In government institutions, of course, bonus is not on profit. It's an entitlement. People are go for strike and all, asking for bonus. They consider it as an entitlement. But bonus should be based on some base. There should be a basis. Suppose the bonus is on the profit of the year. To arrive the profit, you have to first prepare the accounts. Then for preparation of accounts, it takes time. Then you may be finalizing the accounts in June. And no sooner you finalize the accounts in June, the board decide a bonus to be paid to the employees. Now, bonus is decided in June. We'll say June 25. Based on the profit of 24-25 year. 24-25 year. Decided on June 25. Now, then paid in June 25. Are we to consider this bonus as 24-25 income of that employee or 25-26 years income? There's a problem. Because the law, there's ambiguity. Now, in the case of bonus, we always consider it for the subsequent year or the day they decided the bonus. We wait until they declare the bonus. Once the bonus is declared, then only you have an entitlement for the bonus. Then only you consider it as income, right? Likewise, this is an error in the law. Even investment income, this cash basis is not proper. Even for individuals, they should use the word proper basis. Now, as an example, now 3 years back, we had deposit rates of 32%. Treasury bill rate went up to 33%. Some bankers, they offered 28% interest rates. Right? They offered 28% interest rate. Right? Now, we'll say I deposited 100 million rupees, a big amount, at the rate of, we'll say 25% at maturity. 25% at maturity. Annual effective rate 25%. But I am getting this money at maturity. After 5 years only I am getting that. Now each year I can't declare because I didn't receive any cash. Then in the 5th year, when it matured, I had to declare it. Then what will happen? No sooner I declare it in the 5th year, I have to pay huge tax on that. The previous years, we'll say I didn't have any other income. Ultimately, I couldn't claim even personal allowance. Why? I didn't have income to claim that. It is very unfair, no? It is very unfair. Or in the previous year, I may have paid taxes at 6% because I had a low taxable income. But as a result of accumulating in the 5th year, on the entire interest income, I had to pay I may have to pay 36% tax on them, which is really unfair. It is really unfair. Now, these errors are creating a lot of issues to some people. Unnecessary issues. Right. Then,
So excuse me.
yeah.
So in such situations, can we use accrual basis even if we haven't got the interest? I mean, just filing the return, claiming our personal allowance.
Yeah. Now, in
I'm
that example, it is to extreme example.
Yes.
In first year, I didn't have any other income. Therefore, I couldn't claim personal allowance. Second year, I didn't have any other income. I couldn't claim personal allowance. Then I couldn't claim lower tax slabs. But in the fifth year, I got the entire interest income. In that year, I can claim only that year's personal allowance and only slab grades only for that year. Ultimately, I have lost a lot of money because of this error in the law. Is it understood?
Understood. My question is whether we can apply accrued basis in this scenario.
Yes, in some occasions we do that. And when the IRDs are given, we are also arguing, we are saying, we show that the law is wrong. But the problem, they might say, no, law is specific. Therefore, you can't claim. And they can disallow also. Because the law is specific. Erroneously drafted. Law is erroneously drafted. As a result, now in certain cases like that, for these 5 years deposits and all, we apply accrual basis for the benefit of the clients. But there one issue is there. Now there's 10% withholding tax. Now this 10% withholding tax, I'll be getting the withholding tax only in the final year. But in the
Yes.
early years, when I apportion some interest, recognize some interest on accrual basis, I'm not getting that credit of that 10% in the early year. Ultimately, the last fifth year, there may be a over-deducted withholding tax. There's a refund due in that year then. Anyway, can't help. As it is wrong in the law, there's no support by the law. Then when it is a proper basis level, you can change the basis as applicable. But when you are changing the basis, law says without duplicating or omitting of the income, you can change the basis. You can change the basis in the case of this, only in the case of this proper basis, you can change the basis, no problem. But subject to non-duplication or non-omitting the income, right? Subject to that, you can do that. I think it may be clear to everybody.
Yes, very clear.
Right. Then we'll move forward.
Sorry, I'm sorry, sir. So in other words, for individuals, it'll be cash basis. But for a corporate, any investment, it will be on accrual basis.
Yes.
And yeah, okay.
With the entities, for entities, it says proper basis. Only individuals, it says cash basis. Therefore, entities, they can select. No problem. But unfortunately, individuals are cornered. Right. If we'll move to employment income, what is employment income? Employment income, as per the section 5, it says individuals' employment income is the gain and profit from the employment. Gain and profit from the employment. Gain and profit from employment. By doing and by engaging in an employment, you are getting gains or profit. Those gains or profit are employment income. The reason of you getting these gains or profits is the employment. Therefore, we consider it as employment income. Okay, I think it is clear. Now, I'm not explaining the employment income in detail, but in my note, as I prepared this note for some other reasons also, some other lecturing also, I didn't want to prepare, I didn't want to remove the employment part from this note. I kept it there, but by shading with yellow color, Mr. Saman will cover the entire employment income. Therefore, I'll move to the next item. Investment income. Investment income, the section 7 says, a person's income from an investment for a year of assessment shall be the person's gains and profits from that investment for the year. A person's income from an investment for a year of assessment shall be the person's gains and profits from that investment for the year. By making an investment, you are getting gains and profits. That is investment income. That is in summary. Then business income under section 6, the summary is a person's income from a business for a year of assessment shall be the person's gains and profits from conducting the business for the year. Now see the wordings. Here it says conducting the business because you have to conduct a business. In the case of investment, you have to make an investment. That's all, right? Then we'll move to other income. This is very important. Section 8 of the Inland Revenue Act. Section 8 of the Inland Revenue Act. Now, a person's income from other sources for a year of assessment, shall be that person's gains and profits from any source whatsoever for the year, not including profits of a casual and non-recurring nature. This is very, very important. This explanation is so important. Now we'll see this explanation. Right. Give me a minute, please. Yeah. Yeah, we'll continue. Continue. Yeah, other income. Now, there, what I said is a person's income from other sources for a year of assessment. Other sources from a year for a year of assessment. Shall from any source including profits of a casual or non-recurring nature. That means now here what has happened? Legislator was not sure. The legislator was not sure whether the legislator managed to include all income in other sources. Therefore, he introduced a word, other sources, because he is not sure. As I mentioned that day, this word other is a very common word in tax law. Right. Then, but he limited it to not including profit of a casual and non-recurring nature. That means under our Inland Revenue Act, the casual and non-recurring nature incomes, the casual and non-recurring nature incomes are excluded from income tax law. This is very important. The casual and non-recurring nature incomes are totally excluded from our income tax liability. Our tax law do not cover the casual and non-recurring nature income. That's good, no? There's some income which is not covered under our tax law. If we are, that means if we are having any casual or non-recurring nature income, we should be happy because no income tax. IRD can't charge income tax on that. Then we have to try our best. In that case, we have to try our best to define some income as casual and non-recurring nature income. We have to try our best because we are getting some benefit. How to do that? How to do that? We should learn, we should know what's casual, what's non-recurring. Unfortunately, or fortunately, both these terms are not explained in the tax law, not interpreted in the tax law. Both these terms are not interpreted in tax law. It may be to our advantage because we learn that any benefit out of the doubt of the law should go to the taxpayer. If it is the situation, now there's a doubt because the law has not defined the term casual and non-recurring. Then it is always better for the taxpayer and disadvantage to the tax officials because they can't fight on that. If there's any doubt, benefits should go to the taxpayer. But when there are benefits, how to clear this issue? We have to go up to the courts level. We have to go up to the courts level to sort out the issue. As a result, there are so many court cases taken up in the courts on the terms casual and non-recurring. Please note, now I have given, please note that in the case of other income, the section 11 to 19 are not applicable. In the tax law, there are sections. Section 10 is applicable for other income. Section 10 is applicable. But section 11 to 19 is nothing to do with other income. That means Section 16 is for capital allowances. You can't claim capital allowances. You can't claim capital allowances. Likewise, anything covered in Section 11 to 19 are not applicable. Now that means indirectly what it says, under Section 11 only, we are claiming expenses. Under Section 11, we are claiming expenditure incurred in generating, producing of income is allowable. Now, in the case of other income, you are not permitted because Section 11 do not cover that. Section 11 covers only business income and investment income, not others. That is also a mistake. That is also a mistake in the law. Right. However, under Section 21, the generally accepted accounting principles, it is applicable. Now, then, how to decide? I said that tax law do not interpret the term casual and the term non-recurring. Then how to interpret it? In determine, I said only way we should interpret, then the IRD will object it. We will end up with courts. That's happening. And as a result, a lot of court cases are there on this. In deciding whether casual and non-recurring nature, the intention at the time of entering into the transaction is so important. When we decide something as casual or non-recurring, the intention at the time of entering into the first transaction is so important. I'll take a couple of case laws and explain it. One case law is Mahavitarana versus, there are so many case laws. I have picked up only 3 case laws. If you want any more case laws, you all can refer these things by Googling, or CA Sri Lanka has published, through CA Sri Lanka, we published case law books. Now, up to now, we published 3 case law books. Case law book number 1, case law book number 2, and very recently we published the case law book number 3, 3rd volume. 3rd volume is a little bit expensive, the 15,000 rupees, fairly big book. In that, or even case law number 1, 2, you can get case laws with relate to the taxes. You can buy this book from CA Sri Lanka. Right. I'll take 3 case laws and explain Mahavitarana versus Commission of Inland Revenue. In the case of Mahavitarana, he had a tea factory in Talawakali area. Now, as you know, to run a tea factory, what is the raw material? Green leaf. To run a tea factory, you have to have green leaf. If there's no green leaf, you can't run a tea factory. To run this tea factory, they didn't have plantation. The owner didn't have the plantation. Therefore, what the owner did, like in down south, Ratnapura and down south area, mid country and down south, there are so many tea factories depending on somebody else's green leaf. They buy green leaf from small growers. In Sri Lanka, majority of the green leaf are supplied by small growers, not big plantations. Right? Majority, more than 50% by small growers. Now, Mahavitarana, what he was doing for his tea factory, he used to buy green leaf from outside. In upcountry, very few bottle factories, mainly they have their own green leaf. Mahavitarana used to buy green leaf from outsiders and was running the factory. He didn't have sufficient money to buy plantations also. He got to know that there's a surrounding tea factory for sale. As far as I can recall, 456 acres or something, hectare, big area, tea factory. Now he is greedy of this plantation, but he didn't have money to buy it. Even not having money to buy it, what he did? He went and negotiated with the seller to buy this plantation. He negotiated with the seller and agreed for a price. He paid a small advance and signed a sales and purchase agreement. He signed a sales and purchase agreement. After signing the sales and purchase agreement, after signing it, he put a surveyor, assigned a surveyor and surveyed the property and blocked that property into several plots. He heard that the government was trying to acquire some part of this property. He allowed the government to acquire the portion the government want. Then, out of the balance plots, he sold some plots at a higher price to outsiders. Now he got money by selling certain plots as well as by giving the property to portion to government compensation. With these monies, he got this money with a profit. He paid that money to the landlord. Then ultimately he kept some plots for him by financing with the profit he made out of this. Now he is having some plantation which he acquired, which he retained by financing through the profit. And he declared, now he has to declare the wealth for his tax return. No, he declared his newly acquired property as his wealth, and he declared that he bought it by way of a casual or non-recurring nature income. He declared it as a casual or non-recurring nature. Then IRD didn't accept it. IRD said, no, it is not casual or non-recurring nature. IRD assessed him. Then he appealed, he failed the appeal. Then he went to the courts. At courts level, he failed. Then he went to the Supreme Court and ended up with Privy Council at that time. Now this is Ceylon. Now the CTC mean Ceylon tax case, right? Before 1948. Ceylon tax case, right? Then at that time we had Privy Council also. Some of these cases went up to the Privy Council under British government. Ultimately, court decided that IRD's argument is correct and Mahavitarana failed. The grounds was court said, knowing that Mahavitarana not having money to buy the property, knowing that he is not having money, he went and signed an agreement. That means that first action is for a profit making. It is not a casual thing. Knowing that he is not having money, he went and signed it. Therefore, can't define it as a casual. He wanted to earn money, earn profit. That is why, knowing that he doesn't have money, he went and signed the agreement and did this transaction. And the other thing court said, this is a recurring type of, now Mahavitarana is having got the taste of doing this. He might do the same thing again for another property also. Therefore, nobody can say that it is non-recurring, it is a recurring type. Ultimately, Mahavitarana lost it, IRD won it. Ram Ishwara versus Commission of Inland Revenue is also more or less similar to this. This is a property in Colombo adjoining to St. Bridget Convent. St. Bridget Convent. Rameshwara had a daughter. They wanted to send the daughter to St. Bridget Convent. And they were really worrying about the security of the daughter. Therefore, they wanted to live by the side of St. Bridget Convent. But they didn't have money to buy a property. They had money to rent a property. But instead of renting a property, what Rameshwara did, he searched whether there are any properties by the side of St. Bridget Convent for sale. He found a fairly big land there. What he did, he didn't have money, but he went and paid a small advance and signed the sales and purchase agreement. He put surveys and block out that into several pieces by putting roadways also. And he advertised and sold certain plots at a higher price. And with that profit, he sold he retained some plots for him. And he constructed a house and lived there and sent the daughter to St. Bridget Convent. And in his tax return, he declared this as a casual and non-recurring nature income, not tax. IRD challenged it. This is a case subsequent to Mahavitarana. See, with this number you can see 156,984. Then with the taste of Mahavitarana case, IRD challenged it. Ultimately, at higher courts levels, Rameshwara lost it. The court decided that this is a casual nature because at the time of entering into the first transaction, Rameshwara did that signing of agreement with an intention of making profit, and he lost it. We'll move to third case. Commission of Inland Revenue versus De Souza. I think today, after this case law, we will stop for the day. Today, I lost a lot of time what to do because of that disturbance. But anyway, the third case, I'll cover the third case. Commission of Inland Revenue versus De Souza. This is during the Second World War at Hikkadua area. During the Second World War, armed forces went and forcibly acquired private properties for their war activities. Then De Souza's property, which was there in Hikkadua area, fairly big land in Hikkadua area, armed forces forcibly acquired it. After acquiring, they put up a steel structure there called hangar. Hangar is a place where you park vessels. Vessels mean maybe sea vessels or air vessels. That means sea craft or aircraft. That is maybe ships, boats and all, or even aircraft. They constructed steel buildings on that and parked their vessels. After ending the World War, armed forces didn't want this property anymore. They wanted to return the property. At the time of returning, they wanted to remove the steel structure. To see, removing of steel structure is another headache, is another cost and difficult task. Therefore, they returned the property alone with the steel structure. D'Souza got the property with a steel structure building. He didn't want this building. But he got a nice idea. He thought rather than spending money to dismantle it, better to sell it to a person who is willing to buy it. He advertised and found a buyer to buy the steel structure at a price. And accordingly, he sold it. The buyer came and dismantled the steel structure and got it removed from his land. And he got some money. He declared that money in his personal return as casual and non-recurring nature income. With the taste of previous court cases like Mahavitarana, Rameshwara and all, IRD filed a case. IRD said, no, this is other income, you have to pay tax on that. D'Souza said, no, it is casual or non-recurring nature income. Ultimately, this case went up to Privy Council, that is British government, Privy Council. Ultimately, Supreme Court as well as Privy Council decided that D'Souza did at the time of entering into the first transaction, which is the first transaction in this case, forcibly acquiring the property. That is the first transaction, forcibly acquiring the property by armed forces. At the time of happening that, D'Souza didn't have any intention of earning profit. He was not happy of acquiring. He didn't have any intention of earning profit. Then, therefore, court said it was a casual thing. Ahambing. Casual is ahambing siddha vichya. Ahambuak is a casual thing. Then non-recurring, they said it is non-recurring also. To happen the same thing, another world war has happened, and at that point, armed forces should come and acquire D'Souza's another property, property of Souza. This is very, very remote. Therefore, court said, this is neither a casual nor a non-recurring, nor a recurring. Therefore, they said it is not covered under the tax law. Under the tax law, they can't charge tax on that. D'Souza won the case. Are there any questions on these three cases? Are there any questions on these things? If you have any questions, please ask.
Can
Now
I
I
ask a question?
Not including casual. That means now whenever you find any income where you can fight as a casual or non-recurring nature, don't give up. Don't give up. You fight for it, right? But if you have the grounds. Now, I said, with these wordings, the casual and non-recurring nature incomes are excluded from our tax law. Excluded from our tax law. Right. Now, I'll see under section 8, subsection 2, it talks about excluded income. In calculating a person's income or profits from any source, the following, it says following shall be excluded. Now, in that case, they says any exempt income or any income where the final withholding tax is deducted are excluded income, right? In addition to casual and non-recurring nature, this is also excluded. Then it says amounts that are included in calculating a person's one sort of income, you shouldn't duplicate in another sort of income. If you'll include into employment income, don't include that into business or investment or others. If you'll include into business, don't go and include into any other. That is business, investment, the employment, investment or others. Like that means what it says is don't duplicate. Right. As we have muted, I'll see everybody have been muted. I'll see the questions in chat box. At last, what to do? I don't want to mute anybody, but it made us to mute because of these continuous disturbances. Right.
No, we
Right.
can unmute ourselves.
As a result, you have given some questions in the chat box. It seems to be someone has logged, right, okay, that is not relevant. I'll see whether there are any questions. It is not possible to find number. Okay, that is also, all numbers are, right, there aren't any questions. Now I think you can unmute and ask questions. If anybody wants, unmute and ask questions. I think you can do that.
Am I audible?
Yeah, I can hear you.
Yeah,
Please
this
ask
is
you.
yes. I mean, nowadays, like a lot of children of parents are abroad, and they are sending some cash to the bank accounts of the parents as gifts or as a living allowance or something. So is it taxable? That's my question number one. The question number two is like if somebody is receiving a gift, for example, if a husband giving a gift to a wife for her birthday, a car. So is it taxable? So that's my question number two. Thank you.
That's good, no? Right, okay. Right. Anyway, these are not taxable because in Sri Lanka, gifts are not taxable. At present, gifts are not taxable. When we were learning taxation in latter part of 19th, now somewhere around in 1977 to 1982, during that period, we had gift tax as well as wealth tax. Right? At that time, gift tax was there. But subsequently, the gift tax and the wealth tax were removed. As a result, when your children or parents or whoever send money, it is as a gift, whatever the gift. If it is a gift, not taxable. Then if a husband gives a gift to wife or wife gives a gift to husband, as it is also a gift, it is not taxable. Is it clear?
Very much. Thank you. I said it's very much clear. Thank you.
Yeah. Are there any other questions? Yeah. Are there any other questions? Yeah. Do you have any other questions?
Excuse me. So my
Yeah,
question
please.
also is with regards to gifts. Now, as you said, in the hands of the recipient, that is exempt. But say I
Yeah.
am going to give a gift to someone else. Now, in my
Okay.
side, am I supposed to show the inner revenue, the source of it?
Yes, yes. Yeah. Anybody who is receiving the recipient as well as the person who is giving should show these things in his or her tax return. Now, if you are giving a gift to your wife, will say, in your return, you have to declare it as a gifts given. In the tax return, there's a separate page to show gifts given and gifts received. You have to show as gifts given. In the case of your wife, she should show it as a gift received from so and so. With the details, she has to declare. Both parties to be declared. Why this is required? It is to prepare for the tax administrators to prepare the cash account of this particular person, to see whether this particular person has underdeclared or underdeclared any income. Because preparation of a cash account of a person is one way of catching that person for hidden income. Therefore, there should be a facility for them to prepare a cash account for us, for the taxpayers. For that, this is important. Therefore, there's a cage for gifts given and gifts received. Assets acquired, assets declared also, asset disposed also. Yeah, are there any other questions? I'm extremely sorry today. Exactly 1 hour we have lost. But no problem, in next day I'll catch up that. I wanted to do some more today. Now next day, whatever the leftover of today's work, that is today I wanted to cover the investment income also, including the capital gain. I wanted to cover the investment income along with the capital gain, but due to these disturbances, I couldn't do that. Right. Next day, not to worry, I will cover all these things. I will manage to do those things within next few days. I wanted to finish the investment income also today, but I couldn't do that. Are there any other questions? Right. If there aren't any other questions for the day, we will stop at this point. We will continue on the next day. Next Thursday, we will continue. Okay. Thank you very much. Good night, everybody.
Thank you and good night.
Good night.
Good night, sir.
Good night.
Good night, sir.